Now we get to the co-host of Next Gen Investing, Jenny Horne, who's always covering some of the big news on the day. And we'll start with Delta.
So Delta here, I mean, a nice pop, Nicole, 10% to the upside. So not a bad way to unofficially kick off earnings season, especially because there was concern still in this report. I mean, things that, frankly, sent shares selling just last quarter. So they did post overall strong growth from higher sales of their higher priced seats like first class, as well as highlighted strength from their American Express partnership, which grew about 10% in the second quarter to about $2 billion from a year ago. But they did still note that while they are cutting their 2025 profit forecast as they deal with this lower than expected demand, the outlook for summer travel actually exceeded expectations. So bookings have stabilized. That's encouraging, though at lower levels than they had previously guided for at the beginning of this year. And their CEO Ed Bastian did say people are still traveling. And what they've done is they've shifted their booking patterns a bit, saying that they're holding off making plans until they're a little bit closer to their travel dates. And so that shifted some of their booking and yield management strategy. That does include now trimming capacity outside of the top travel periods, as well as what Bastian described as surgical cuts after peak summer travel season does come to an end around mid-August. So they do expect now adjusted earnings per share $1.25 to $1.75 in the third quarter. Street have been guiding for around $1.30 at the midpoint. So, I mean, not a huge miss by any means, but definitely that actually would be some upside at the midpoint of where we had previously been expecting. But revenue, that's flat to up 4%. That exceeded forecasts of around a 1.4% sales increase. And again, I think that what their critical offerings are is they continue to seek this less price-sensitive consumer, where a lot of us are just basically value hunting when we're searching for flights. But Delta has this more loyal, high-income consumer that is more resilient. And for that reason, its total revenue per seat mile, which is a measure of how much actually it's bringing in per the amount it flies, just actually fell about 4% during the quarter, as premium products rose 5%, but sales from main cabin actually contracted about 5%. So a lot to like, but I think definitely felt like a more optimistic tone from the company overall from when we heard from them previously back in April.
Yeah, and Delta was the one that had expressed some concerns about domestic revenue, and now we're finding people are ready for the fancy seats. They're ready to spend it all. This outlook certainly seems better than expected, and that goes into the soft data when you think about sentiment, and that may give things a boost overall if that's how people are feeling, right?
I mean, absolutely. And I think that there was all of this concern that somehow the economic uncertainty, the tariff policies were going to weigh on then travel. And there was like a murkiness in regards to willingness to spend on tourism. And I know this has been an area of huge growth and maybe even better than many had thought for several years now. But also, like, look at the hiring reports. Look at some of like non-farm payrolls, for example. We still see pretty consistent hiring in leisure and hospitality. We still see, well, airline fares have fluctuated and oil is partially to blame. I mean, there's still hugely an appetite for travel. And I think this reiterates the fact that while all those airlines were basically polling or changing their guidance last quarter, it seems like now we're more back on track to where we were to start this year.
Right, overall, yeah. How about Taiwan Semi? Reported its June revenue. What are we thinking about this?
I mean, this is amazing. I know NVIDIA has been our superstar of the week, but Taiwan Semi, I think, also deserves some love, as we did see sales are booming as it does ride this wave of demand for AI processors. So Taiwan Semi did record second quarter sales of around $31.9 billion. So that was ahead of expectations pretty handily, and sales were up 39% from the same period a year ago, which was actually a slight slowdown. Pace of growth was around 42% in their first quarter, but they did not give any makeup of those sales. So we'll have to wait to get the full financial scope when they report on July 17th. But drivers likely being read for the second quarter as all things AI chips. I mean, we've seen now a really nice recovery in Taiwan Semi, a 53% gain just over the past 3 months, ahead of the gain we've seen from even NVIDIA, which has actually gained about 51% over the same time frame. And their relationship is very important. I mean, Taiwan's growth, well, it doesn't quite match NVIDIA's 69% revenue surge in its last quarter. we do know that NVIDIA does have to maintain this competitive edge over its competition, whereas Taiwan Semi, I mean, I've always said what a brilliant business model because they dominate high-end chip manufacturing, and there's little to suggest that they're facing any real competitive threat, as we do see more and more Intel trying to carve out its niche in this space. But thankfully, Taiwan's already ahead. It already has major manufacturing facilities under construction in Arizona, and it's already made big partnerships with the U.S. well ahead of some of the domestication and the tariff news we've gotten under Trump. So I think that this company has been firing on all cylinders, and the chart honestly speaks to that as of late.
Yeah, understood. I mean, we think about NVIDIA yesterday. People are pretty excited about the group overall, right? You know, I know we see futures sort of bopping around, but any moves mean record highs again.
I mean, it's been amazing. And it's an amazing stat to me that you can basically take every chip name you know, combine them, and they're still now smaller than NVIDIA. And Taiwan does not warrant that same massive market cap that, say, NVIDIA does, but it's definitely at still lofty levels. I mean, all of these names now do remain fairly stretched on a forward PE basis, but hey, when you're talking about a company this large that's still able to post almost 40% growth, and we're criticizing because it's not 42% that we saw last quarter, I mean, you're in a pretty good spot, I'd say, all things considered.
All right, and good news saying that with the CEO being so confident at Delta about stronger demand, that also makes people feel pretty good. Jenny Horne, great to see you this Thursday morning. Thank you.